All right, so hmm, this one is a journal entry on PDRA inversions, and it it's gonna involve a lot of inclusion of weekly profiles, intraday profiles, and understanding of Judah swings, manipulations, key levels. So there's a lot in this one. Let's see how I do to make an effective journal entry. So first off, we need to be tracking the week. So we are looking at the week of July 15th, 2024. And one of the key things is first identifying what type of weekly profile you could be in. So here's our measure. We are looking specifically at how this array will play out so that we can get the best game plan of attack for the rest of the week. So Monday's range and a new week opening gap are key things to help with the process of elimination. Before we got into Thursday's trading, which is what we're going to review in this journal entry, we're looking back from Monday through Wednesday to try and determine what type of profile we have. Monday's range gives a Tuesday high. That wick numerically is higher than the high of Monday, so Tuesday high. But at what point are we sure this is a Tuesday high for a sweep continuous bearish or potentially a Wednesday low? So what we will do is we will take the next range, which is going to be the previous day's range. So the previous day's range is all about setting the high and the low between midnight of Wednesday to midnight of Thursday. So up until this point, if you can imagine Thursday's midnight candle, we are not yet sure if this is going to be a bearish flow through Thursday or if this potentially could reverse on Wednesday to make a bullish run. What we have seen, however, is once we get below or once we start to challenge the previous day's low, that's when you start to get confidence that you are making a bearish run. So other ranges we need to keep in mind, the previous week's range, so pink line, high and low, as well as the monthly range, previous month's high is at the orange line. So let's see if I can do this right. Previous week's range, previous day's range. We're going to track all of those. Previous day's range, previous week's range, previous month's range. We're going to track all of those. So let's dig into the intraday profile. So what we're looking at here is the AM session, lunch, and the PM session. And we know in hindsight that this is a 2-session down close. Both the AM leg and the PM leg had bearish movements. And what we're looking at in this complete range of about 91.5 handles is how do we get in? When do we know for sure that this is going to be bearish, or when do we have a greater likelihood that this is going to be bearish? And what I'm entering in the journal today is using these range lows or range highs. So dotted line, previous day's range low. Pink line, previous week's range low. Orange line is the previous month's range high. We are above the previous month. We are challenging it, coming up, coming down to the high of the previous month. And we're going to use these levels to frame out, with an intraday profile mindset, how to tackle prices like this. So let's use the AM session, and we're going to look at this journal entry here. Now on this day we had an 8:30 AM news. It wasn't very dynamic. The new week gap is up here in this shaded area. Then we see the 9:30 open. Price works both sides of the range, taking both the low and the high, clearing the table of both anyone who had stops here that wanted to go long, and additionally, as it started to break down, it took out any early sellers first. So the AM session kicks off with a clearing of liquidity before we see a dynamic bearish move lower towards the previous day's low. And the journal entry is going to be Number one, on this bullish manipulation, when in a bearish flow, remember Tuesday high below the new week gap. We're then challenging the previous day's range low, and we're going to look at a price action here. Then, after we get that AM bearish run, we're going to use the lunch range coupled with the previous week's range low to set up a journal entry 2, which is all about another bullish manipulation when bearish. So from the AM session, we can see we have a strong bearish run. That's the first sign. We leave some buy side liquidity intermediate in the AM leg, which is the second sign. Lunch range takes that internal liquidity before shifting. That's the third sign. And then lastly, we see the PM run until the power hour, which is at 3 to 4 o'clock, is bearish. Once we sweep the previous month's range high, then we actually get a market structure shift of some meaning before revisiting the previous month range high and then shifting higher. Now that's all great, but how do we get in? So here is the AM session setup. This is journal entry 1. We see price run down to the previous day's range low and create this bullish leg. Now it's a bullish leg in a bearish program. We have strong bearish activity, and then we see this bullish leg. This bullish leg could be understood as a displacement leg for price to retrace and go higher. But what I'm going to put in the journal entry today is that it's actually a manipulation leg. It's a Judas leg. So this price leg is going to tell us everything we need to know about actually joining the bearish trend. So first off, it's sweeping the previous day range low, but it's doing it in a fashion that creates some structure below the range. That manipulation leg goes back into a premium array, which was the M5 SIBI. So that M5 SIBI is an anchor point below 930, below the new week gap, with a Tuesday high in mind. All of that activity is in the background, and now we're looking at this price action leg to help us determine how we can get in. So we're thinking about this manipulation leg, and we're using an inversion pattern. So we take that manipulation leg and we're going to set our range on the manipulation leg. Red is the premium, green is the discount. If we are sellers, we want to sell at premium. We want to sell at premium. If we are buyers, we want to buy in discount. So with this manipulation leg in mind, we're focusing on the premium side of that leg. Now we anticipate it's a manipulation leg because we have a Tuesday high weekly profile. We're below the new week opening gap. We've shifted or moved aggressively bearish after 930. And we're making this fractal structure around the previous day's range low. So in a lot of respects, there's temptation to look at this as deep discount off of previous range low. But this is really inverted premium. So with this in mind, we look at the manipulation leg. We take the premium level of the manipulation leg. So this dotted line is signifying that that run up is a manipulation leg. And we want to sell in a premium. So we're going to take the manipulation leg, look for PD arrays that will help us to frame an opportunity to go short. So in that manipulation leg, we can see in premium on the, let's call it the buy side of this mini curve. So up in premium, we see a fair value gap and an order block. Now on the bottom left is just a description of what we're using to frame an inversion. So we're looking for some array in our manipulation leg that will then get broken. A candle close, for example, below it. It will revisit it and then go lower. So specifically this fair value gap, when price breaks below it, it will revisit it and then go lower. On this order block, when price breaks below it, candle close, it will revisit it and then go lower. So in that premium leg, the premium side of that manipulation leg is where we're taking the arrays. We don't want to sell in discount. We want to sell in premium, but we're waiting for price to signal that it's ready to shift. So that's our fair value gap, that's our order block, and what we're looking for is effectively price to close below, revisit it, and then go lower. Same thing with the order block up in premium. We're going to break below, revisit it, and then price goes lower. When we start to close below the previous day's range low, that's a very good sign that we are on side. And where we're targeting is at least the next key level, which is going to be the previous week's range low. Journal entry number 2. A little bit more complex because there's now a lot more moving parts because we're taking the lunch range. So that's noon to 1 o'clock. We're setting the high and low, and we're looking for liquidity in the AM leg. So 2-session down close will require that there is some internal liquidity in that AM leg. So the diagram on the top right shows our bearish move in the AM, shaded in green. Lunch will give that building or taking of liquidity. We're ultimately looking for liquidity, internal buy side liquidity to be taken before we're able to continue our move lower. So the pink line is the previous week's range low. So activity around that area is what we're looking for, just like in the previous example. So as we see, we have our manipulation leg coming out of lunch. It's taking buy side from the AM leg. So we're looking at these internal buy side levels. As price shifts or moves, manipulates, does a Judas swing bullish, it takes a level of buy side and then finally gives a bearish push. Has to be happening after the lunch range has formed. So buy side is taken following the 2-session down close profile. We want to sell in premium. So when we identify that manipulation leg, we are finding the premium area of that leg, and then we're taking the moves that are bearish off of the PD arrays up in premium in that manipulation leg. So you're basically saying there's a manipulation leg. Where would I get in? What type of array would I want to use to say if I wanted to continue going bullish? And then I'm going to wait for that array to get broken. Then I'll set my entry on that array to go short. And I'm going to use that as my inversion. So here you can see price breaks below that fair value gap on the manipulation leg, revisits it. Once price breaks below the order block on that manipulation leg, then it revisits it. It revisits it pretty aggressively, staying below that fair value gap before it moves lower. And where is it moving to? It's moving to the next higher time frame level. Okay, last thing I wanted to put in this journal entry is a quick down and dirty way to kind of set daily intent. So daily time frame, a lot of times we're using a lot of daily candles to frame out the day, and it requires a crap ton of patience just to wait for certain PD arrays to hit within a 20, 40, or 60-day look back. And that's perfect for quarterly shifts. That's great for 3-month moves. But if we're talking intraday, here's a little tip to help get you there faster. I want to credit a friend of mine, Tina, has this as part of her strategy, and I found it so cool that I started to incorporate it myself. So we're taking the daily candles range, standard daily candle time frame, and we're going to set the high and the low. Time-based range, classic stuff that's always used. Now, with fibs, ICT talks about the OTE, 61 to 78. We also know that we have an aggressive entry, like a continuation retracement level, typically between the 23 and the 38. So retracement level 1 aggressive, 23 to 38. Retracement level deeper, OTE, 61, 70, or 78.6. what we want to see is very simply the next day's candle open up and confirm or make price action during Asia around either the 23 to 38 to continue higher in New York, or I retrace to the 61, 70, or the 78 and then go higher. So here's a couple of quick examples. Daily time frame chart, you simply take your candle when you're bearish, include the wicks, and what you're looking for is on the next day during Asia to see if price will stay within the 23 to 38 for a quick continuation. So that's one example. You're going to use this for each daily candle as just a format or a way to kind of frame quick bias. So here is the inverse, where price makes a bullish move, comes back up, and then throughout this downward trend, you're looking for flips. You're looking for areas where price is going to change direction between the 23 to 38 or the OTE. On a continuation example, this candle, you're trading the next day, price gaps up, comes back to the 23 to 38. You're looking for some confirmation on a lower time frame for that price to go higher. Same thing on the next candle. Wick to wick, price opens up, drops down to the OTE level. You wait for your intraday profile time of day, but this is just a quick down and dirty way to try and set intention for the intraday traders. And I want to just credit Tina for that one. That was amazing. All right, so that's it for this journal entry, and we'll do it again next time.